Good day, fellow value investors. Stellantis is now an interesting stock to watch because it's getting cheaper and cheaper, but the potential is there. If we look at this cyclicality of Stellantis, it is absolutely crazy, and we are now again at these lows that have offered great cyclical returns in the past. On top of it, there is a strong dividend, a lot of cash on the position. But let me start with something that I discussed 3 years ago. Don't watch if you like Stellantis. And that's interesting with now the new Stellantis CEO proposed here by YouTube going into 13 billion US investment. What I discussed 3 years ago and how I was totally wrong back then is this. I said that likely shareholders will end up like this old lady in Reggio Calabria where its Stellantis Fiat car didn't do pretty good. Since I made this video, the stock went up 66%. It went from, what was it, 15 to above 25. And only from March 2024, it came back 66% since then. Or 43% since I made the video. So I got a lot of negative comments, especially when the stock was up 60-70% since my video. But now, radio silence on Stellantis, now is the time to watch the stock again. Perhaps it will be a panda, perhaps they will spin out dividends and this investment will be your portfolio Ferrari. Let's start with the analysis. If you like this, please smash that like button and consider subscribing to the channel. When it comes to automotives, we will look at the earnings, the fundamentals, but the key is always the automotive cycle. Because if we look at the results, at the end a car is a box with 4 wheels on it. It needs to bring you from A to B. And let's look at exactly that cyclicality, because if we look at what's going on now, their free cash flow industrial is negative 3 billion. That was positive 8 billion just a while ago. Operating adjusted income, which means they are losing money now. So they have no profits now, and we are not in a significant bad recession. That is something to keep in mind. So we are not rock bottom at the cycle, but we are in a downtrend or down part of the cycle. What do you do when all those electric revolutions growth doesn't work? Well, you simply put a new leadership team in place and then you go on. However, you see 7% shipments down, net revenues on lower prices and forex 13% down, adjusted earnings down 92%. This is how cyclicality impacts the automotive market, and something that I have been preaching for the last 10 years. But here we are now, and now things are getting interesting. They are trying to do turnarounds, North America, let's say get rid of the inventory, Europe, the weakness there. Okay, if whatever happens, they make a positive turnaround, the stock can be a plus 50% quickly, like we have seen in 2023. There is still a strong cash position of 9 billion net, but look at how it just declined 40%. They burned through so much money over the last 6 months, 7 billion gone. So the negative cash flows with the dividend, that's how quickly the money is gone. And keep in mind, this is from the 3 year ago video. Their core targets was to go electric, to go into that path, new markets, huge investments, 30 billion that they have invested, powertrain, gigafactories, solid state technology, and all of that is now gone in the wind, and that's how you burn money. And these impairments can again come back due in the future as things don't work as expected. You can see here 150 to 300. If it will be 150, it will be a good situation, but we must, as value investors, look when the sentiment is ugly and investors are capitulating. Because when you look at the numbers, This is the cash position. This was the big bull thesis 2 years ago, and I told everyone they're going to spend the cash. The debt went up and the cash went down and is going down further. So if there is a recession, they're going to burn through this cash and then things will look even uglier. Where does 8 billion go? Into inventories, and if they are not capable of selling these inventories, then you will see again huge impairments, which is now the key risk when it comes. They are re-establishing financial guidance, hoping for things to remain stable, trying to recover things, new CEO, new investment plans, new leadership, AI with Mistral, new chief financial officer, so everything new. And they are going into investments into the United States. So what is the risk and reward here? The company, Stellantis, the management is irrelevant. The key is the cycle, the trends, negative. Let me show you. Stock will go up on any improvements, down on any negatives, and the inventory is to think about. So when it comes to the situation now, it doesn't matter. We have to just look at the global demand for cars forecast. The growth is really slow, 1% and not much improvement. This is Google AI that I have asked there. Stable, and if you can make money in stable, great. Stellantis for now can't make money in stable, so that is something. I said the trends were negative. So you say, Sven, people are buying more cars, developing, yes. But look at this. China car exports, and this is not going to stop. You can buy a Panda or something, or you can buy something cheaper, likely better, made in China. On top of it, there are other cyclical headwinds, like interest rates to buy a car in the US. We are still at 7-something%. This is far from the auto industry boom of 4%. Delinquencies, this or that, and we don't yet know whether this will go to 4. If it goes to 4, car sales get a little bit traction, then again you have a 50% up on the stock. However, if there is a recession, this is Vice President of Ford 2007 article discussing how a good year in the industry, sales of 15 million units, severe recession 30 million units, and that drop, a little over 15%, is really the difference between decent performance and severe losses for a car company, with a lot of job reallocation of job destruction, I might add. So I also said they will lose if a big recession comes, and now they are investing again 13 billion on top of the 30 billion in the electrical vehicle bust. It's another bet, and that is the problem I have with Stellantis. I think we are cheap enough, so you can buy now and then you buy again if it goes down 30-40%. You sell, regain your position back then when it comes back, because it should be cyclical, it has a lot of cash, it will survive. Therefore, it is interesting, but it becomes a cigar butt that maybe has a few more puffs left in it. I really need a stock like this, an automotive stock, to capitulate, you to capitulate on it. You're saying, I will never touch automotive stocks again, and then I might really look at it. I might wait 10 years, maybe 2, but let's put it on our watch list. If I put it on the quadrant, the returns likely above 10%, all else equal, just any kind of improvements will give you 50% quickly. There is significant risk, therefore I put it here on the high risk side. But let's see, if the stock price goes lower and all else remains equal, I will start putting it higher, and perhaps it will reach low risk and high reward, like my research platform here. It competes with this, so I have to keep it here. Check what I do in the link in the description below. Thanks for watching, and I'll see you in the next video.